Today's topic is about I got audited. Isn't that distressful? And so how do you feel about that when you shout it out? I got audited. Of course, it's not a joy. It is a burden. And it is a thing that happens when you are in business. So I just met a client today and he got audited. Then he was telling me that many of his friends he knew also got audited. So maybe this is a sentence that being shouted out a lot more often now than before. So today we want to talk to you about what you're gonna do when you get audited. And to understand the audit process, to understand what the consequences might be, it will help you. And one thing I can tell you, in United States of America, when you get audited by IRS, there's rules and regulations behind this whole thing. So you are not getting audited because you met this auditor in the supermarket and you happen to bump into him and knock off his basket. So he was so mad. And then he went back to his office and he's going to audit you. No, nothing like that would happen, should not happen. So our regulations and the rules and professional conduct will prevent that to happen. So audit is not a retaliation, not someone getting mad at you and you are sorry. Audit is a process that IRS put together to really guide compliance. So they want to make sure that people are in compliance. They follow the rules and regulations. So now let's talk about audit. First of all, I want to lead your attention to our website. I believe you are viewing my website right now. And know that you can always go to appointment to set up appointment with us, with partners in our firm, and for different areas, right? You see our areas of expertise are different. So you look at who you want to talk to, you book our time, you come to see us, and we are a company, have been in audit world for as long as, I wouldn't say as long as the earth existed. Of course not. IRS is not even that long time. So I would say accurately 25 years. So with that kind of experience, folks, and we know what's your next step, we can guide you and you can check us out and come in here to book our time. And we also put all the knowledges over here on our YouTube channel, and you saw that we make complex ideas simple. We make your audit straightforward, and we help you, we protect you, and we know you're right. So we always do things that you should be receiving. If you have whatever right you have with IRS, and we're here to see it through so that it is a fair audit and it is a process that you can feel good about. Audit is not good, but out of not good, if you can feel about the process is fair and is thorough, and yes, I may end up paying some taxes because of the disagreement of how we book things, how we write off things. That's all reasonable, but we want to make sure we have a fair audit, right? To understand it is most key. When you come over here, you can literally search. You can type into tax audit right here. You see me typing, folks? And if you put in enter, then you got all kind of audit coming out. We talk about audit all the time. It is part of the business, folks. And if you say, whoa, no, Ying, I never got audited, and just hold your breath, because a lot of audits are coming in, and it is not the same like during the pandemic time. I know during pandemic time, we're probably working on 1 or 2 audits. And now it is opening up, so it's going to return back to normal. Compliance audit is part of our business elements, people. It is not anything strange. So now let's go take a look at my prepared slides for you. And so this particular section is called I Got Audited. And then speaker's information, this is where I should brag about myself. And I know several of you this is your first time to ever listen to me talking about the knowledge I'm sharing. And my name is Ying. I am the CEO and a managing partner at Community CPA. The other partners you see when I was clicking on the calendar, and they are partners, and obviously I started, and I'm the founder for the company, so I call myself managing partner. And then my credential, I have won a lot of awards, and I won't even bother your time to tell you. And you can check me out on internet. And I most want to brag about is that I served on the Federal Advisory Committee for 3 years to IRS. So I understand IRS just that much more than other people, than you, because I understand the system and I know where they come from, and I appreciate a lot of things they do the taxpayer don't even know. And there you go. So with audit, and I think our guidance in our firm to you, it is the good one, because we are coming from understanding for you. We speak 9 different languages. We absolutely understand you. And then we also understand what's going on at IRS. And I wrote a book in 2019. That book is called Appointment with Ying at 8 a.m. And that book is about how to start up a business. And I just finished my second book, Appointment with Ying at 10 a.m. And that one is growing your business. So that will be published this year for sure. I finished writing it in February. And then I am now on to 2 p.m. and 6 p.m. So my books is about your business journey. For every businessman and woman, when you come through the business process and you will know how to start it, you will have to learn how to grow it. And if you grow it really well, you go to merger and acquisition. That's my 2 p.m. And once you are getting there, and there will be a day you call retirement. That is my 6 p.m. Today's retirement for the business owners is different from our parents' time. So I want to write about that, give you ideas, enrich your retirement life, because life is going on for business owners. And some business owners tell me that I don't understand the word of retirement because I don't see it happen to me. It will happen to you. It will happen to you in the very good ways, beautiful ways. You enjoy life. You also enjoy your accomplishment. That is my 6 p.m. So now going forward, and the next slide is about my 10 a.m. book. And we want to, before we start this whole content, no responsibility disclaimer. If you learned something here today and it hurt you so much and you lost your life, no responsibility, because this is a free webinar and it's coming from good heart and meant to educate you. And if there's anything inappropriate, we will learn, we will improve. But for you, when you make decisions on your taxes, on your audit, and you want to make sure you engage professional firms, do not go about just checking on the internet. It's not enough. Now, how do I know I got audited? How do I know? Are you going to get a call from IRS saying, hey, you got audited. Congratulations. Are you going to get that? No. IRS will never call you to tell you they are ready to audit you. And you are going to get a letter in the mail. Are you going to get a knock on the door and the auditor just showed up with a badge, goes, you get audited? No. And they don't show up in the badge to audit you without you getting a letter. Then you maybe you got the letter, you don't open it, and you put the letter in the shredder, and you don't even want to know what's in there. then they have no option but figure out whether you are a real person or not. They might show up at your door with a badge showing that they're an agent, right? But normally, you should get a letter. There's no other alternatives, folks, to get audited by IRS. They give you a letter. What does the letter look like? I know this is not perfect, screenshot. I was trying to get a clear one and I couldn't. But just look at this letter in general. It doesn't have a lot of balloons and the spaghettis. It is just a plain letter printed on white paper and black letters. Okay, there's no highlights. There's no colors. There's no handguns shooting you because they're going to shoot you. So, but they do have IRS information on the left-hand corner. So they tell you where this notice is coming from, what day they give that to you, who they intend to send. On the right-hand side, they tell you, and this is your social security number or EIN number. We're trying to audit you on this ID. They tell you which year. They tell you which tax form that is. They give you a lot of very definitive information, so you know exactly what they want to look of your taxes, right? Then in the letter, it will tell you that, hey, you are selected to be audited. They're not going to say something like, hey, you're doing a very bad job. We don't like what you're doing, so you're getting audited. There's no reasoning on the letter. The letter just gives you a fact. You are selected to be audited. The letter also going to give you a scope to tell you what they're auditing. Then you may say, why am I getting the letter? What did the IRS do before they audited me? Okay, this, great question. So the IRS has this screening station. I'm putting out a map for you because this is the map from IRS. So we ask IRS that, hey, before we get the letter, what did you do? Did you just pull out, hey, that pile, number 3, we audit that one? No. IRS has systematic measures. They want to look, deviation scores, which is the score between, the calculation between your data and the national average. So they look at these analysis. They look at what happened to your return. Why is the machine rejecting your return? So there's a lot of mechanical things going on behind it. So the screening station actually would get the return came out to a separate pile. So these returns are good, filed, no problem. These returns, for whatever reason, they need to come out. So that screening station will send out the audit in 3 ways, folks. If you can read that 3 dots right underneath that screening station, the number 1 is correspondence exam. What does that mean? That means a letter, a notice is going to go to you and a mail to you saying that, hey, my system shows you made a $50,000 income, but your tax return didn't show that income. Tell me what happened. So it's an inquiry. It's a correspondence. And most of the correspondence return are closed out pretty quickly if you answer them timely. And the most regular one, it would be the one called the CP 2000 because that notice says that your data and the IRS data doesn't automatically match. So the system spit you out and you owe more taxes based on what the IRS know about you, and that's when they would send you the correspondence notice. But they don't have to do that. They can also send your file to the office exam, which means that this is the place where they send into compliance department in your local office. You're from Texas? No problem. We're going to send that to Texas Houston office. So that office people will have your tax return, and then the instruction to that office is that selecting 20 out of the 100 to do audit, or audit 100 of them, all of them. So there will be instruction for the auditor locally to pick your file to audit. This is why I said that it's not possible if you made the auditor mad in the grocery store, you happen to step on his toes, and don't worry. He cannot just go to audit you. He really has to go by the rules. All right? So with that said, they can send that to a letter to you. They can send to your local office. What is the third one? Third one is a field exam. That's the highest level exam because the auditors are going to sit in your house to audit you. If you are being audited with a personal tax return, the field audit means they are coming to your house. The office exam means you're going to the local office. The correspondence exam means you're getting a letter. You do it on your own and send it back, right? So this map kind of gives you an idea. What did IRS do before they audit me? They already gone through the screening. They already know you should be audited for the questions they have in mind. Then you might ask me that, okay, Ying, now I want to know what are the things would trigger IRS to audit me. Can you give me a list of that? Yes, I have a list for you. And it's a list of why am I the lucky one? So let's look at what the lists are. The most common reason for IRS to audit you, number one is White House initiatives. See, I put that in number one. I literally put that in the sequence where we see the most. Of course, our firm, not representing the whole country, our firm covers we actually cover a lot more states than just 3 states, but we have branches in 3 states, right? So the whole, generally speaking, and some of those audits are coming in are initiative from the federal government. For example, they could set initiative for, say, retail businesses with Latino owner. They could do that. Not that they discriminate Latino owners, because the data shows that they probably have a lot more miscalculated or incorrect tax filings in that group of people. Or maybe they're going on initiative to do 1065 partnership return, a general audit. Please select 10 partnership return in your area, and we want to understand how things are going. So those initiatives are necessary. That's how IRS can improve and can do better. So they have objectives like that for initiative from top down, right? That's number one. And right now, and in the, with Biden administration, Grace, can you get me a glass of water? With Biden administration, they have a goal set to actually do compliance, how much money that the IRS would collect back. So that way is actually helping the budget. So the number, and I remember from CARES Act time, it was $362 billion. That is the amount they would get back from the taxpayer. Obviously, it's not President Trump's dollars because he never paid anything. $900 doesn't really count. We have clients paying millions of dollars to IRS. So those kind of audit are meant to make taxpayer pay more, pay back to IRS. So, IRS can federal government can set initiatives to target certain business and the groups so that so they can get what they need. Thank you. So number 2 reason, the reason I put that on number 2, because that is the second largest one you would get audited. It is your return that you filed do not match what IRS has in their system. Example, we have a doctor and who always practiced in one state, but their tax return and come back up for audit because they have income that the doctor never reported. Do you know what that income is? It is income from a different state. It's a W-2 income. So apparently, someone was using this person's ID to work in California. So the W-2 comes and landed on our client's name. But our client would never know what they have because it's not their work. They didn't go to California. They live in a different state. So with that said, of course, we can go back to IRS, tell them, we never really, in California, this is a fraudulent return, and the IRS will make adjustment. But those differences are the trigger for audit. And of course, the third one is your ratio were way off comparing to the average number the IRS sees in their system. For example, if you are a restaurant and you made $2 million sales, the restaurant cost of goods sold before pandemic is about 35% and under. After pandemic, it is like right around 50% of under. Okay, it went up because the supplies got really expensive. So with that case, what if a restaurant come out and made $2 million sales? Their cost of goods sold is $2.5 million. And that will trigger you to be audited because you're off from the reasonable average. IRS knows where your restaurant is. IRS can pull out the restaurants surrounding you in that area. IRS knows exactly how people make some money. So with that kind of data, you understand we live in the data world. Do you understand that every decision IRS makes is data-driven? And even for a small firm, for a firm like our firm, we use data to guide our practice. We use data to put this webinar because our data shows that there's more than 10 questions for the last month coming in related to audit. So we know that is reflecting of how the whole small business world is all about. People are getting audited left and right. Okay? So data speaks volumes. So you want to know that whether your ratio, when you report your taxes, and you want to report that in such a way that and you are doing it according to the industry average. And then, of course, you say, well, Ying, that's not right. I do have 2.5 cost of goods sold. It's not a lie. That really happened because, this flood happened, and I lost all my inventory. I lost all of the food I ordered, and, it happened. Okay. If that's the case, it should not be really just filed as a cost of goods sold. That's a casualty losses. So you want to elaborate that in your tax return in the different area. So IRS can see the normal operation, can also know that you have this loss from this unexpected event, right? So with that said, you just need to understand that is one of the reasons why you are ranked up for audit. And you are due a large amount of refund. You file tax return and you're asking for $1.5 million refund and you think you're not going to be audited, you bet you will be audited because that's a large amount of refund. Okay? And claim too much of charitable donations and claim too much of home office. And you have a home, but you only leave 1% for yourself to sleep in. 99% is for business. Oh, yeah. That would trigger IRS to look at you. Why? Is that really true? And you have 1% for your personal use, 99% for the business? Should never be true. And home office, there is a norm out there for people who use the home for home office. That ratio, that norm ratio is 15%, just so you know, right? And claim too much business expenses. Yeah, I made $60 and I claim $60,000 expense. That's fishy, right? So those can trigger audit. And claimed properties that is not under the same tax ID. What does that mean? I write off a property on my business return, but that property is not even belongs to the business. So, with that said, the IRS system is getting better and better. The state government, federal government, getting more connected than ever. And they can look at your tax ID, and they can look at you the recorder's office record from the county, and to know that it doesn't belong to you. Okay? So those are the triggers for the audit, and they use too many wrong numbers. IRS system is smart enough that after they take over your tax return, and the system will show up saying that this return has too many wrong numbers. And if you do, and then you will be rained over to one of those lines, either correspondence, and so they will check on a couple of line items for you, make you reply by letter, or they send to the office, or they do field audit on you. So there you go, you get audited, right? Now, my next slide is so amazing. Everyone asks questions related to this, and I condensed that into one slide. And I want you to have it because I want you to understand how the audit impacts you. This is everything related to you. When you get audited, this is what you must know. Number one, you must read the letter. I don't care how scared you are. You can pee in your pants, but you have to read that letter and understand everything on that letter. If you say English is my second language, I don't read it, then translate that. And you, as a taxpayer, before you do anything, read the letter. That's number one. Number two, know the due date. On the letter, it will give you a due date. Please don't miss the due date. Okay? Some auditors are very understandable. Some auditors, that's their pet peeves. They don't work with taxpayers who keep on missing due dates. They don't like it. So don't just, haven't even started, you already made your auditor upset. Don't do that. And you want to respect the auditor, do things that they see normal. I don't need you to buy present for the auditor either. They won't take it. You don't need to be extremely nice to the auditor. It is business. They want to make sure you're in compliance, and you want to make sure that you prove that you're in compliance. End of the story. All right? Decide to do it yourself or hire out. Very important step. And you got the letter, you understood it, and you know the due date is next week. Between now and next week, you need to decide, are you going to tackle this on your own, or you are going to hire it out? I mean, hire it out means you hire Ying at Community CPA to do it, or you hire other people from other CPA firms to do it, or you hire lawyers. A lot of people would be qualified to help you. But you need to make a decision. The reason I say that is I do not want you to do it yourself halfway, then throw the other half to the professional. It is not good. Because what you said, what you do with the auditor will be used against you, and your representative later on step in has no clue of what you did. So the auditor could say that, no, that's not what the taxpayer said. Before you come on board, the taxpayer already said that these are personal expense. So what do you want Ying to do? If you already told the auditor that it is a personal expense, and now you tell me it is not, that doesn't work. Okay? So with that said, you must decide. Of course, you will say, well, then Ying, okay, fine. And if I hire out, what kind of dollar amount I need to budget? So what is in your CPA firms or other CPA firm or lawyer, how they charge us? So of course the charge is different. They go by time, right? Depends on how much you have, how messy you are. But in general, with our 25 years experience in working with so many clients, I would say that if you budget $5,000 a year on audit, that should really be okay. Could be less, could be more, but if you have to know a boundary, a amount, that would be I would say 5,000, okay? And then with that, you will say that, but what is the pros if I hire someone versus I represent myself? So I already mentioned to you that if you represent yourself, you want to go throughout this whole process on your own. because you really should not be hand over half of the case to your representative, because it is just not really not efficient and then not going to help you that much. Okay, but I will tell you at what point of time it is you can change. You can say, I did it myself really bad. Now can you take it over from here? And that is the point when you get your 30 days letter. So look at my next point. Get final assessment on form 4549 and with the 30 days letter. This is the auditor getting done with you. The auditor goes, goodbye, I'm done with you. Here's my 30 days letter, and here's the money you need to pay. And, in 30 days, you either pay or you go to appeals. So this is the moment you can change representative. Even if you hired somebody, they did a bad job for you, like doing the audit, and this is the time you can hire somebody else. Okay, so in this step, I'm sorry. I didn't expect my voice would give up today, but okay. So under this section, getting final assessment and getting a 30 days letter, and if you have to come up with a decision, you either pay or you don't pay, you go for appeal. If you go for appeal, there's more time there. You can wait for a year, 2 years, and the longest appeal we have done is 4 years. So can be a very long time. But during these years, you don't have a liability. Your tax just gonna pause, and there's nobody collecting from you, and you're in the limbo and waiting to be resolved. So you can, if you don't pay, you file appeal. But you cannot say that I'm not filing appeal, I also don't pay. Then you can't get away from that. They will file levy on you, they will garnish your wages, and your life will be upside down, and you'll be crying all the time. Okay, so this is the place where you're done with the auditor. And then, what if you've gone to appeals and the appeal made a decision already? They're giving you a 90 days notice after that. So the appeal will give you a letter. So we'll give you 90 days to decide whether you want to go to tax court or you want to pay. You cannot say, I don't want to go to tax court, I also don't want to pay, because if that's the case, you will be subject to collection actions. They will file levy on you, and they will, garnish your wages, and, IRS would not be quiet. You'll have them all the time. You got a collection agent come over to you and talk to you, figuring out what you have, and force you to set up an installment agreement. So you want to proactively set up the installment plan with IRS, pay it, or decide to go to tax court, which you will do petition, and no amount will be due to you either. You will just wait for tax court. And our tax court side of things, and our experience, our longest time is about a year. So it wasn't really very long. Like the appeals, we actually have appeal case that lasted for 4 years. Audit lasted for 4 years, then the appeal lasted for 4 years. So that whole audit was 8 years fight. So it was quite something. And so now you down to your rope into tax court. You say, I don't want to go to tax court, and I'm going to set up an installment with IRS, and I'm going to pay. See, in my writing, I said amend state tax return. So this is really important. Every time you finalized your tax liability with IRS, and don't forget, you have state. And you may say that, well, I'm not going to say anything to the state, so I'm not going to pay anything. That is not how it works. So right now, the IRS system and the state system already electronically connected. So when they know you owe taxes, that means your income increased, right? During the audit, the auditor made your income higher. That income also goes to the state. So you ended up will get a state notice saying that, hey, you paid something to the federal government. You haven't even paid me yet. So it will be new tax dues for the state as well. Okay, so now, say you got into the final assessment, you decided not to go to court, you set up installment, and some years you are so broke and you don't even have money to pay installment, so the IRS put a 0 on there so you don't have to pay. In 3 years' time, from the date you are assessed with taxes, keep that in mind. From that date, you are assessed with taxes. The taxpayer, you, can file bankruptcy to not liable for the tax due. You can file bankruptcy, okay? But the taxes has to be 3 years. The tax due has to be 3 years old in order to file bankruptcy. So what is bankruptcy? If you don't know what is bankruptcy, that means to give you a fresh start. And the government will give up on their liability collection on you, and you will just paying your lawyers to file bankruptcy. After that, you are clean. And of course, your record gonna have a bankruptcy. You're not gonna borrow money really easily. But 7 years later, that bankruptcy record will go away. 7 years later, okay? So that is a 3-year time frame. There is a 10-year time frame in my slides as well. It is a time where your liability will no longer be collected by IRS. So this is what we say, generally speaking. Of course, it's generally speaking, because there's always special rules that it doesn't apply. It's not true. And 10 years didn't go away, So, but generally speaking, IRS statute of limitations period for collection of tax is over. So let's say you owe tax, your new tax was assessed in 2023. So by the time we arrive 2033, you are 10 years over. Your debt is 10 years, your liability is 10 years old, right? IRS will no longer collect that on you. They cannot legally collect that on you. And you will no longer have garnishment for wages. You will no longer have these collection calls from IRS. And your levy, they cannot file levy on you, okay? But if they filed levy already before, then you have the levy. Then you continue to have the levy, right? But they are not going to enforce that new on you and after the 10-year statutory of limitation. So this is the steps you must know when you get audited, okay? So I always have people ask me questions, so they owed like $250,000 taxes. So the taxpayers are so scared because they think they're going to jail. And owing so much, I'm going to jail. And so I want to say that by merely just owing dollars to IRS, you don't land in jail. There's no such a thing about you owe money to IRS and you go to jail. But there's other things will make you go to jail. So let's look at my next slides. Am I going to jail? So look at this. Small business owners are not likely to go to jail due to a IRS audit outcome. So, they're coming to audit you. They just want to make sure that you pay taxes that you should pay. And if you had a wrong filing, and if you did something wrong, and, there's sometimes you didn't do anything wrong. It's just the opinion of the auditor is different than yours or different from your tax preparers. And it is both parties are not wrong, but if they couldn't agree on a one method, then you still owe, right? So I have, a couple years ago, I have a client who got audited, and she's a realtor with a lot of rental properties, okay? So in the tax return, there are certain things that would qualify for bonus depreciation. So it is an immediate write-off, immediate tax saving. And when IRS audited her, and the IRS auditor want that to be a ordinary depreciation straight line. IRS don't want bonus depreciation. So, when you ask why I cannot use the bonus depreciation, there's no why. This is just what IRS wanted to see. You depreciate less in this year, pay taxes, and then you depreciate other years accordingly. So I tell my client that it's not worth of fighting over and whether I use bonus depreciation or not. I'm not going to even bother. And because eventually you get deducted anyway. It is a 15 years property, so you got bonus depreciation. In 15 years, it's going to do the same thing. But if you did bonus depreciation, you sell it early, you still have to do recapture, right? So really, the math is just all about time. It is not about the result. The end result going to be the same, but it's time when you deduct it. So with those kind of different opinions, folks, and it's just up to you. If our clients want me to, support us, continue paying our fees to fight for that with the auditor, we do. If we don't get through auditor, we get through appeals. It doesn't really matter. But if we consider our fees, consider the outcome, the dollar amount, and then we say, well, just okay, it doesn't matter. And then you finish the audit, right? So really, these things don't get you to jail. These things just get you to debate and get you to prove, get your muscle to be exercised around compliance so you know better, right? It's education, really, in essence, right? But you can go to jail for not filing your taxes. And you can also go to jail for lying on your tax return. So, we heard the story, and to depreciate the building, and our President Trump, and on their property valuation, and 50-some floors, and they made 60-some floors. So they got a whole bunch of more apartment to depreciate. And do you think that's a lying on tax return? Absolutely. Absolutely. But, he's president, so he doesn't get audited. Okay? And I do believe in privilege, and obviously he has privilege. And I don't know why in White House and they don't decide on, getting the president audited before they come in to become a president, right? According to CNN, there is a rule like that, but it just didn't get implemented. Privilege, okay? Talking about that. I have opinions about that. Okay, however, you cannot get to jail for not having money to pay your taxes. Relief, right? Relief. So don't stress out. Don't lose sleep. And the tax fraud, the government charges you for tax fraud. It's different than our small business owners who are confused by the language. By the language barrier, right? We just don't speak English really well. I misunderstood. So those are reasonable reasons. And the tax form too complicated, not reading English, and putting down the wrong number in the wrong line and things like that. And so those are not tax fraud, my dear. These are mistakes business owner do. Okay? And you don't, others do. And if you work everything yourself, and most likely their things wasn't done right. You're not a tax professional. How could you know that, right? So understandable. So making sure that you are not having this imagination about tomorrow you go to jail, because that is unnecessary stress. And when you are stressed out, we're stressed out too, because you come to us like if you're going to go to jail tomorrow, and we are thinking, man, this guy must be having so many criminal conduct in these taxes, maybe we should not even take this client, right? So in our firm, we do have attorneys. So if you get into very pickled situations, then our attorney will step in to help you. Now, I want to introduce to you of this organization, and it's called Taxpayer Advocacy Service. So taxpayer, TAS, stands for TAS abbreviation. And the reason I want to mention this to you, I'm going to quickly read this to you. TAS is an independent organization within IRS, and is your voice to IRS. Okay, they are IRS employees, but they don't report to the same line. So your auditor reports to the manager reports to regional manager. So they are the line on the examination, right, on that chart. But taxpayer advocacy panels, the services, they are not reporting to the same line. So the bosses are different, so they are not worried about those auditors, okay? So taxpayer, TAS, resolve taxpayers' problems, especially if the problem causing you financial difficulties. And I have a real example. I have a client, and they suddenly got levied for $58,000 out of their bank account. But the clients actually was going through cancer treatment. The $58,000 was about half of that is just arrived from the parents overseas. They mailed the money in because the cancer treatment is very expensive and they needed that money. So they asked for parents to move in the money, but the money came into their account and levied by the IRS. So I send our client to the TAS local, and so they resolved that immediately. Of course, the money didn't come back like next day or anything, but it was immediately resolved, and so the money came back as a check. So went back to the bank account. So these are the things you can get help from the taxpayer advocate services. And you may be eligible for that help if you try to resolve your tax problem through normal channel and have gone nowhere, okay? Or you believe IRS procedures is just not working for you, right? So, for example, if you have a tax due, but the tax due was coming from nowhere, it's a fraudulent tax return, and your who knows, maybe your tax preparer is fraudulent. So those are the things, and you felt like you have no help. You call IRS, they don't care, and they don't know what to do. And there's so many new people on the phone, they actually advise you, the path they gave you doesn't work for you. So with that said, you can go to taxpayer advocate service office, right? And I have this number here. And you can call to find out where to go. And I also have this website. If you go on there, you go to irs.gov, advocate and local taxpayer advocate, and go put into your state name, and it will give you all the offices in the state. So I put in Iowa because there's just one in Iowa. So I try to fit into the screen. So you see, there's just one office in Des Moines, in 210 Walnut Street. So you can get hold of the real people there, folks, and if you need help. And most importantly, they are free. They don't cost you anything. You don't have to come to Community CPA to get things resolved. You can go there. But of course, you have to qualify. And the qualification, I really don't exactly know the qualification. I think it's based by your situation. But they will tell you. Once you qualify, they say, I'm helping you. And you're going to get a hold of a person. It's almost like your special service person who will walk you through the whole thing nicely. So I want you to know that. How to avoid audit. I know we talked about if you get audited, this and that, but is there any way like you can get away from the audit? No, there's no way. No way to be 100% audit, proof. And so since there's no way to be 100% proof, so you want to do it maximum, right? You want to try to do everything you can to be in compliance under the radar, and so that you don't get rained out for audit. So use extension. Filing extension is one way to go out of some sort of data selection, okay? And electronic filing is another way to help you not to be rained out for audit. And do real accounting, okay? Not Excel. Use real system. There's so many good accounting system out there. And even at our firm, we use our accounting system. And if you subscribe to our system, and you can pay your 1099 folks out of our system, you can write check, you can do financial statement, and you can do everything in our system, okay? So use real system, folks. That's important. Of course, tax structure optimization is also important. If you're already running $6 million sales and you're still under Schedule C, are you crazy? And I have crazy clients coming in. I see them. I look at a $6 million sales, and then their net profit is $5.5 million, and they're on Schedule C. Every tax professional will tell you that you are most crazy if it is not half crazy, right? So structure is important. It's almost like when you are an adult, you don't wear baby clothes. But if you fit yourself in the baby clothes, of course you're going to save money for buying baby clothes, but you are going to be very uncomfortable as well. And those kind of discomfort can easily be spotted by IRS. So they're like, well, that guy walks weird. Let's audit him. That's what happens. And the data match and join our audit prevention program. So at our Community CPA, we do data match for you. What do? We match your data with what IRS has for you. And we tell you you're good or you're not good, you're bad, and we fix you before you file your tax return. And do tax planning. And use tax organizer. Okay, we have an organizer. If you need one, and if you are our client, you can ask for it. And we send that to you. And tax planning, we always do tax planning, folks. And tax planning, people think that, I don't need to plan. Whatever I need to pay anyway. That is true for some people, but not true for business owners. Not true. And work with professionals, And that is something I always say. These professionals, the older I got, the more respect I gain from professionals. I'm not talking about myself. I'm talking about other professionals that I work with. Because I realize, and I really don't know everything that professional person is doing. So someone is in a profession for 20, 30 years, that is the person you need. You don't want to go to someone who just opened up a shop and you don't even know whether they last or not, and you give them a tax audit project. The audit project lasts for 8 years. What are you going to do? They already closed the shop a long time ago. All of your data is in there. This is story I tell you. And we have this rental unit. For so many months, the tenant didn't pay taxes. So this is one of our clients. The rental unit didn't really have anybody paying, the rent for several months. So our client went to open the door to see what's going on, right? So the door opened, nobody is there, everything seems to there. So the person is nowhere to be found. Internet cannot find anything, nobody can find. You know what's in the office? It's taxpayers' tax document. So this person was a tax preparer and had so many clients' information in that office, and it's just really scary. So our client boxed it all up and brought into our office because there are people calling that office trying to get their data. They can't. This is what happened when you work with people who are not there for a long run, right? So these are real stories. I'm still trying to figure out what to do with the tax document that doesn't belong to us, okay? So with that said, you want to work with professionals who are in the trench for a long time. Now, two more slides, and the IRS document years. So this is something that people always ask us, how many years do I need to save it? Can I throw it away? So you see 3 years, 2 years, 7 years. Without reading it, why don't you just do 7 years, right? So keep that in mind. Of course, 7 years is with condition. So keep records for 7 years if you file a claim for a loss from worthless security or bad debt deduction. But just to make it simple, can you just keep it for 7 years so we don't struggle for what we are doing, right? All right, the last slide, not the least, is data match again to help prevent audit. IRS data match, data draw is a special service we offer to our client to do data comparison before taxes is filed. This process will help you prevent your business from receiving surprise notice in an audit, okay? All the data in IRS is yours. You have the right to know what IRS has on you, okay? So with that said, folks, this is our today's talk about IRS audit. I really hope that I offered some information that you have nowhere to get. And I am really proud of the couple